Smart investing requires all of us to look at the tax angle, something that is often overlooked among common investors. So today, our guest will spell out just how investments are taxed and what you can do to maximize your gains. I'm Edric Mendoza, and you're watching On the Money. Our guest today is Suzan Bigay, a registered financial planner with an expertise in tax planning. Hi, Suzan.
Hi.
You like that? Expertise. So
no, that's why I'm thinking, is it that right? Okay.
I think it's accurate. So we actually need to now tap that expertise. Maybe we can start by talking about how, Filipinos will treat taxes like it's poison.
Yes.
Now, you have a
and
different...
cheat as much as they can.
Right. So you have a very different view. Explain.
Number one, we should not really treat taxes as something that it's like what you're saying, poison, or something that whenever we think of taxes, the first thing that comes to our mind is, let's cheat it. No, it's not true. We have to pay our taxes because non-compliance is very costly.
Sure, that makes sense.
Non-payment is very costly.
It's even more costly, you're saying, than just paying the taxes outright.
Yes. Dishonesty, very costly.
I like that. That is true.
It costs you purgatory.
That's true. No, but even here, the consequences, right, financially.
Yes.
That's
why whenever I would be asked about taxes, I always tell them, don't look at the deductions. Look at the coming income because of that, and you are being taxed.
There you go. You plan around it. Taxes are reality.
It's more of that. It's more of that.
So let's think about how we can plan with that in mind. No? So the revenue code is actually not very easy reading. So some common investors, right? What do they need to know about taxes?
One is, for example, it's good to look at the mutual funds, good to look at the stocks, good to look at the investments in real properties, or investments, let's say, in companies, in the form of you receive dividends in the form of, that's it. You receive income in the form of dividends.
Sure, okay.
So all of these, more or less, are subject to tax, but you receive it net of tax.
Understood. So the tax implications, let's start with mutual funds. What is the tax on a mutual fund?
Normally, the tax is actually, for all of this, is about 20%. But when you receive your money or your proceeds from your investment, it's always net of tax. And whatever they publish in the papers, this is fantastic nga eh. Whatever the income that you receive in the papers are already net of tax. So let's say, you receive about 20% per annum in a mutual fund investment, that's already net of tax. Compared to, for example, you put it in a 5-year deposit, time deposit of about 5%. That's nothing.
Let's talk about treasury bills and bonds, fixed income assets. What is the tax implication there?
Okay. Like now, no? It's not advisable anymore to go to T-bills because more or less the interest rate is about 2 to 3%.
Right, below inflation.
And then our inflation is about 3.5 to 4%.
Okay.
Now. So with that, the same tax, it's about 20% or all, but the net that you can get is very little.
Because of the return.
Because of the return. So it's not advisable.
Right.
That's why it's nice to concentrate because what you're saying is 20% of all these tax or all of these deposit instruments or financial instruments. Sometimes you don't really study that because when they quote you an interest, it's always net of tax.
Correct.
It's always net of tax. So when you invest, let's say, in different types of pera or this type of other mutual funds, you get 21, 18, 15, 12, 10, net of tax.
Already.
So what you consider now is your cash out and your cash in without tax.
And also making sure that whatever returns you are looking at are net of taxes.
Yes,
as you
it's
mentioned,
always like that. That's why
if it's not net, the 20% is very substantial.
That's why, you know, in the Philippines, the people handling our finances, like Mr. Espiritu, the one of Central Bank, these are very good people. In fact, we are being admired all over the world because of how they handle the financial idea here in our country.
So I hear, it's great to hear
that's why they're telling us that we are one of the emerging economy. And there's a lot of money coming in because of how our financial
Fiscal
ministers
policies,
are really working through us. That's why what I want to say is that all of us, the Filipinos, even if you're only receiving, let's say, 15,000, 20,000, really look into investments.
That makes sense. Let's talk about taxes on real property, for example.
Okay.
What are the taxes involved?
That's a very good investment. Very good investment. Okay.
So what are the taxes involved?
When it comes to real properties, the only tax there is the gain tax, the capital gain tax, which is 6%.
of the
gross. So it's like
transacted-
this.
Yeah.
The idea is you have the zonal value, you have the fair market value, and then you have the selling price. Now, whichever is higher,
Of
that's
the
where
three.
you will be taxed.
Okay.
So, for example, we are relatives, and then we decided, okay, I'm going to sell to you my condo for 3 million, but the zonal value is 4 million, but the fair market value is 6 million. Even if we sell
Agree
it
on
for
3.
about 3, you will pay for the 6%.
Of 6 million.
Yes.
The highest value of the 3. I understand. So watch out for that, no? Businesses?
Okay.
Taxes involved in businesses?
Okay. Remember, I was here before and we were discussing that. So there are
Yes.
3 types of taxes. One is the gain tax, the one that we're talking
For
about, the
real
real
property.
properties. Second is the final tax. This is a final tax, for example. I invest in Globe and they gave me dividends. That dividends, I have to pay a 10% tax. That's what you call final tax. That's the second tax. When it comes to business, this is the one that you're saying, this is what you call graduated tax. If it is a corporation, 30%. If it is single proprietor, the maximum of 500,000, you are taxed by 32%. That's why it's advisable if you are single proprietor in the beginning and then you're earning more than
More,
500,000,
you evolve
go to corporation,
corporation.
because you only have to pay 30%.
Okay.
But when it comes to returns, when it comes to returns, it is good to do business. Returns about 300% in business.
Okay. Now that final tax you mentioned on the Globe, that would be a stock, for example, right? So
Yes.
earlier you said stocks and mutual funds were all 20%. So
Okay.
is the 10% on top
Okay,
of the
it's
20?
like this. Okay, no, it's like this. The one that I was telling you of this thing of the,
Final tax.
if for example you're selling stocks of domestic corporation and they are not traded, okay, the tax is, that's what you call gain tax. The tax is 5% for the first 100,000, and then 10% for the next 100,000, in excess of 100,000. Now, when it comes to your investment in Globe, kasi the one of the 10 and the 5 is when you're selling. The one of the Globe, you're not selling it, you're receiving a dividend, a share in
I
the
see.
income of the
Right.
Globe. So that's a dividend. Then you will get a 10%
I see.
tax for that.
Okay. Very good. Now, there have been changes in the tax system as of late, no? Payment and disclosure of taxes. So, for example, disclosure of investments with final taxes in the ITR. Can you explain how that works?
Yeah. Correct. Because now, we have a very good commissioner, no, in BIR. And she is known really that she's honest.
That's always
So-
a good reputation. Yeah.
And the thing there is that now, to avoid complicity or, for example, non-disclosure, there is a changes now in how you file your income tax return.
Okay.
Before, when you file your income tax return, you only file whatever is really included in your income tax.
Okay.
Now, even the final tax, which is not part of the income tax, it's also filed or disclosed. That's why in
The
that
final tax we talked about earlier.
because
okay.
technically, when it comes to final tax, when you say final tax, that's already a final tax. You're not supposed to put it in your income tax return.
Sure. Okay.
But now, because
You
of
have
this
to.
new regulation, even if you're not taxed, they want you to disclose it.
Why? Transparency?
Transparency, and at the same time, you know, some issues that we had before, the reporting of the SALN, and sometimes there are some reports of SALN that is not complete. So with this, if they don't complete their SALN, more or less, there is a little deception, so to speak,
I understand.
that can be talked about.
Okay. Now, I don't know if we'll have enough time for this, but the PERA bill. Did you want to talk about that?
That one is a
It's-
nice, but you know, there's a problem. It's not yet implemented, but it has been there. It has been talking about. PERA bills is like a savings account that you can put as a retirement fund for
Right.
Filipinos. Okay,
Like the
This
US
is-
401ks.
Yes,
Like that.
this is very good because it has a lot of exemptions, income tax or tax credit. It's really like helping ordinary Filipino people to come up with a retirement fund. And they can even use it up to 5 times. Now, here, it's not yet applicable in the Philippines.
Not
I
yet.
don't know.
It's been ongoing for a while, right?
There's a
Yeah.
lot of discussion about that, and even me, I've been waiting for that, but it's not yet implemented fully.
Okay.
So as of now, we don't know what will be the final say when it comes to PERA bill.
And even the timing, no?
Yes,
we don't know
yes.
yet. Okay.
But that one is really good. The moment it's implemented, we just have to look at the implementing rules of the BIR, and then I suggest all Filipino people, get into that. Study that and get into that.
Great. We're going to have more questions for you in a bit, Susan. In the meantime, we just have to take a short break, so keep it here on The Money. We'll be right back. Welcome back to On The Money. Time now for a daily dose of Salve Says with Salve Duplito.
The stock market has been described as a feast or famine industry, and everybody seems to be making money. But history shows that famine will strike, we just don't know when. How can investors protect themselves?
It's called the emotional cycle of investing. People go to emotional cycle. Simple is when markets are going up, they become more greedy. When market starts going down, they hope that the market won't go down. And when the market goes down halfway, there's fear. And then when everybody's panicking, it becomes desperation.
Everybody goes out.
Everybody just, because at the lowest point, that's where everybody gets scared.
Let's look at that cycle for a moment. Where do you think you are right now? Where do you think the market is?
If you look at it from the Philippine context, is that there are a lot of skepticism. People are so afraid to invest because they don't understand that we're seeing new territories. We're in interest rates at all-time low. We've never seen it before.
With the PSEI breaching new levels almost every week, most people think the market has passed optimism, instant wealth, and euphoria. Not Edward Lee. He believes there is still very little interest in the market, considering that the Philippine investor base is small at 600,000 in a country with around 90 million individuals. He says we still have a long way to go. Edward Lee says stocks were more expensive in the 90s under the Ramos administration at 20 times PE, and yet prices still went higher after that. In a thin market then, how can investors protect themselves from the inevitable downturn?
You don't need to crash a plane to learn how to fly, right? So the same with the stock market. Once they understand the precaution, once they understand the emotional cycle of investing, how psychology works, human psychology works in the stock market, then you will outperform, you will do well.
Old-timers always say, hope is not a strategy. It is only part of the cycle of investing after all. Understanding the psychology that moves markets helps investors invest for the long term, not just when the bulls are running.
Still with us is Suzan Bigay, a registered financial planner with an expertise in tax planning, amongst other things. And of course, Melissa Heculeo with your money questions. Hi, Mel.
Hi, Edric. Hello again, Susan.
Yes, how are you?
I'm good, thanks. I'm happy to
Yeah,
see
we have a
you
lot
here.
of great questions for you today.
We do. Okay, the first question comes from Leah via email, who asks, what are the investment tax shelters that only the rich know about? I bet they have plenty of those. Kawawa naman kaming mga manggagawa.
Okay. There is no such thing as number one, kawawa, kaming manggagawa. Okay, there is no such thing as like that. Also another thing is that there is what you call no tax shelters for mayayaman. No, the idea is it's just that we are this thing of financial investments or investments are not really very open to the poor people. Why? Because we always think that okay, investments are only for rich people and investments are only for them and for us is hard work because of the mentality. But actually, investment should be for everyone because the minimum amount that you can invest, at least, not 100, the one that you told us, no, 5,000, at least 5,000. So when a person is receiving, in fact, a while ago I was computing, let's say you're only receiving 20,000 a month. You save 5,000 for your mutual funds every month, every month, every month, while you're still young, 23, 24, 25. This one can help you really increase your financial equity. Okay? So that's the idea. That's why this thing of the tax shelters, no, the idea is read. The manggagawa should read. The manggagawa should have interest. If you get to know other countries like Taiwan, you know, the messengers, the janitors, they are all into investments. These people.
Because
Why?
they've educated themselves. They're
Yes, there is a
financially
high financial literacy.
Right. It's not so much how much you earn, it's what you do with what you actually make, right? That's
In our country, it should be like that. That's why this kind of program should reach poor people. Just speak a little Tagalog.
Yeah.
There, see? Okay, good,
So
good,
ito,
good.
nagtatagalog na kami like that, right?
I did
Yeah,
the question.
you did. There you go,
Very good,
manggagawa.
very
Good job, Mel.
Very good,
So
very good.
Suzan C.
Now the next question comes from Trisha via email. She asks, the revenue code gives incentives for long-term investments. Is this correct? Could you please explain to us the different tax treatments when we keep our money invested longer?
Correct, correct. There is a benefit that is given when it comes to time deposit. They give you a 5% net of tax. This is an incentive for every people so that they have this idea of tax savings. Yes. So the longer you have, the greater savings that you may have.
Okay, but
And the
basically
less
they're
tax
just
also.
they're just not penalizing you on service
Yes.
charges. It's not necessarily
Yes,
that
yes,
they're
yes.
taxing you less.
Yes, because
not charging you.
the government is giving us an incentive to save and save and save. That's why they give us this incentive of no tax for 5 years. That's long. Huh?
Yeah.
You lock in your money for 5 years.
Okay, I see. Okay, now Edsel asks, I sold my property at a loss last year because I needed cash to pay for my mother's hospital bills. I was still charged a 6% capital gains tax on the fair market value, which was higher than the actual selling price. Was there an error?
No, there's no
you
error.
clarified
Actually,
that.
this
Yeah,
is
we
something.
talked about this. Oh,
Yes.
yeah.
This is something very funny because when you sell stocks, okay, when you sell stocks, they consider the loss and then they tax you based on the net capital gain, including the loss and the expenses. When it comes to real properties, no. Whatever expenses you may entail, no. It goes to the gross. So there are 3 computations that you have to compare: zonal value of the property, the fair market value, the selling price, whichever is higher. So whatever is the actual amount that you receive, it doesn't matter. Whichever is higher, you are penalized, not penalized, but
You're
you have the
taxed.
tax.
You are
You
taxed
are
on
taxed
that.
by 6%.
Right. On,
And
So
the
you're-
question is, why? Because in the States, it's not like that. They consider the losses, even in Europe, they consider the losses, they consider the expense before you are taxed. In the Philippines, no. Why? Because
Why?
the Filipinos,
Yeah, that's a good question.
I'm sorry, but the Filipinos are known to, we like to cheat a little.
so to
we don't
prevent,
really
right.
disclose how much we sell the property.
Right.
So,
Just avoid maneuvering and manipulating.
so the idea is, okay, whatever it is,
Yeah.
the fair market value, you will be taxed 6%.
Right.
That's it.
Okay, so here in that case, a
There's no
stock
error.
investment is better tax-wise for you than
Yes.
real property.
Yes.
Okay,
Yes, yes.
and is it more? Are taxes higher from buying or selling property than they are from inheriting? Which is higher?
Okay.
I like that laugh. It was loaded. Okay, here we go, Susan. Go.
So,
That was a
okay,
loaded laugh.
Okay. It's like this. What you're saying is, it depends. It depends. Because when you are selling properties, now, for example, now there's a little complication. If you're a corporation selling properties, you now sell your properties and there's a capital gain tax plus VAT. Before, if you're a corporation and you're selling properties, there's no VAT. That's one complication. Now, you're selling an inheritance property. It depends. For example, if, for example, the property is under your name or name of your parents, and there's no proper like last will, then the tax will be high, about 30%. That's why
Okay.
of the total estate of your family.
Right.
That's why it's good that before they die, they settle the estate plan.
Okay.
They settle the estate plan. Otherwise, it's very expensive. Sometimes people cannot really transfer inheritance because of the tax of 30%.
Okay, so it's better for them to already transfer the title into the name.
Yes. To the
Okay.
children.
To the children. Lower
yes.
taxes
Before
on
they
that.
die.
Before-
But you know,
yes.
among the Filipinos, it's so sacred to talk about, Daddy, before you die, you transfer the properties to us. Diba? This
It
is
seems so
very sensitive.
inappropriate, right?
This is
Yeah.
a very sensitive topic. That's why you just get asked
Anong
like that.
sinasabi mo, right? What are you
Yeah,
trying to say?
You just get asked
Waiting
something like
for
that.
me to die.
But it's really when it comes to practicality, the tax is higher when
Yeah.
they're dead.
Yeah.
Yeah. Okay, now Dawn asks via Facebook, I heard that the PERA bill, which was approved but not implemented, should have provided some breathing space in terms of taxes for us regular investors. Could you tell us more about the benefits of the PERA bill?
Yes. Number one, PERA, what is the meaning of PERA? PERA is personal equity and retirement. Okay? Retirement fund or account. And this one was established really with the idea to help Filipino people come up with the funds without any taxes at all. This is beautiful, just like the time deposit, but this time there is no time limitation. Okay, so when you have the PERA account, you can prepare for your retirement. You can prepare for your technically retirement, no? Even for ordinary people and OFW, by the way. This is something that's important. OFW, and there's no income tax. There is a tax credit. When you say tax credit, the 5% of your 100,000, you can use that as a deduction of your previous tax.
Wow. Okay.
And there are others. For example, that's one. And then the one is the income tax. There is no 32% or 30%. You don't have to file a final tax for this. This is the PERA bill. And if, for example, you're going to buy properties, there is no gain tax.
Wow.
If you're using the PERA bill, you know, this one is pro-Filipino. The idea is they would like us Filipinos to learn more about investments, and they don't want us to penalize us by giving us higher taxes and more taxes. That's why they come up with the PERA. The problem is, up to now, it's not yet being implemented.
Why? I think that's the big question, right?
Yeah,
Why
it's
is
not
that?
yet being implemented. I don't know. You know, there are
revenue?
many beautiful bills
Yeah.
in the pipeline that will really help our country and our Filipino people, especially the poor manggagawas, you're saying, but still in the pipeline and not yet with implementing rules. That's one I don't understand.
But it is approved already.
It is approved,
Well,
yes.
that's the good news, I guess.
Well, what are
At
we
least,
waiting for?
Right? Yeah.
Is it the BIR that's stopping
Right.
it?
These are the things. Like, for example, there is
know.
one. Isn't it that there is a income tax that you have to pay at 30%? There is a particular business organization, you call it BAMBI, Barangay Micro Business Enterprise, that you are free from your income tax every year, as long as you have a total asset only of 3 million. But you know, this one is not popular. This one is not being really encouraged. This is another thing that there are many good things that our congressmen, senators, that they really put up as a bill, but still not yet implemented and not even known.
So
not even known.
the Bambi is implemented, it's just not known.
Not known.
I see.
We need to do a whole episode on
I'm going to
Bambi.
find out, yeah.
Yes, this one
about
is
that
very
Bambi.
good, but not known.
Yeah.
Not known.
Interesting.
Okay, now Chico Aran asks, is there a move to relax taxes on investments since this income is in a way effectively pump priming the economy?
As of now, the personal investments that we have, there is no news of relaxing it, except for those multinational companies coming in. They have a lot of exemption when it comes to investments and to taxes. But here, among the existing one, there's none. What is being encouraged is that we have to know what are the financial instruments that you can use with little principal, that everybody, let's say an ordinary minimum wage earner, can really put his money. But no way, as of now, there's no way of relaxing it. As of now, there's none.
Okay.
But it doesn't matter. In fact, what I want to say is, don't look at the taxes.
Exactly, that's what you were
Don't
saying
look at the
earlier.
deductions. Look at the value added when it comes to investments.
Yes, and the
Because now,
principle.
yes, what should happen is that, for example, me, I'm a professional, the only breadwinner of that particular accounting firm that I have. If something happens to me, that's it.
Yeah.
But if I have a lot of investments, as if I have a lot of ATMs, I have different working horses. This is what we have to teach our Filipino people. Work on that so that they are not only dependent on their health, on their whatever they have, but if they have other investments, no fear.
Okay.
Something happens to them. That's it.
Well said. Well said.
Thanks, Susan. Send us your money questions via email or through Facebook and Twitter, and we'll try to answer them in our upcoming episodes or on our next Q&A Friday.
Insightful learnings on taxes, but as Susan was saying, focus on growing
Yes, your
investments
principal,
and
growing
where
your income,
rather
yes.
than ways to work around the taxes. Thank you again, Susan. Mel, that's our show today. I'm Edric Mendoza. Join us again tomorrow for more talk and tips so you're always right on the money.